you're talking AI, you have to also be talking IBM. Let's welcome in IBM CEO Arvind Krishna here at the Milken Conference. Good to see you again.
It's great to be here talking with Yahoo Finance, and what an energy and buzz here on AI here at the Milken Conference.
All right, well, let's stay on that buzz, Arvind. How is IBM reinventing itself for this AI era?
Look, AI is a fundamental technological shift. We believe it'll cause $4 trillion of total value to the industry. Not all of that to the tech industry, but to the industry at large. All our clients want to tap into that. It's going to cause productivity, it's going to cause revenue gains, it's going to allow them to have more nimble enterprises. So what we are doing is building the AI that's good for the enterprise. Efficient, open source, in a way that our clients can control the IP and deploy it where they want. That's really what we're about.
You talked a lot about that increase in productivity that's likely to come out of AI. Can you talk specifically in these early stages at least, how your clients are deploying Gen AI?
Absolutely. I think there's 3 use cases that really, I think, bring this to life for us. So if you think of contact centers, typically when people are doing customer experience, can you help that person become way more productive? So they might have to navigate amongst 3 or 4 screens. If you ever called a bank, you might notice the person on the other side is hesitating. They ask you, can you hold on for 30 seconds? Well, that's because they're looking something up. Could a generative AI step in and instantly get the information by querying the underlying myriad of systems? Can it make that person way more productive? By the way, productive means they get your query as an end user answered quicker, you're happier, you're more likely to get a correct answer. The AI never gets tired or angry or snippy or anything like that. I think that's a great use case. I think that's going to be endemic, everybody will use it. Second, coding. Making coders more productive. Everybody has tech debt. Can it help you get rid of the tech debt faster? Means that every enterprise is going to have more capabilities to offer their end users and their employees. I think these 2, without a doubt. The third one where we are seeing a lot, we call it digital labor. In these days of tight job markets, demographics that point to less and less people of working age, can I get a digital worker to augment the human worker? I think these are 3 great use cases. All our clients are interested in them. We ourselves use them as the first client, and it's giving us all of those benefits.
Warren Buffett at his annual meeting talked about how the AI genie is out of the bottle, and he sounded concerned. I love all those things. Please, tell me my big bank balance without getting snippy with me. I get it. Are you concerned that AI will have too much power, and what are the risks from AI?
I actually have no such fear, so I'm putting it black and white. I think there's a lot of people who hypothesize, and as we have seen in many technologies, thinking that the rate of progress, which has been 100 times over the last 3-4 years, is going to be another 100 to 1,000 times. But just for the current AI, we need this much infrastructure and power for it to be 100 to 1,000 times. How much more infrastructure and power? I think it's a little, I use the term fantastical, to keep predicting that it carries on an exponential curve. I think it'll get widely deployed. I think billions of people will use it across hundreds of processes. That will happen. But to imagine it's going to reach this point of superintelligence, I'm a bit of a skeptic on that topic.
One of the big debates that's happening within the big players in AI is open source versus closed source. I know you're shaking your head because you're leading an alliance pushing for open source. For those who are not necessarily following closed source, we're talking about those like OpenAI, as well as Microsoft, Google. What is the risk of a closed source AI?
Yeah, so I think on any technology, for it to get that escape velocity, for it to really become ubiquitous, you got to balance between 3 things. Competition, you need competition, because as we all know, walled gardens tend to generally have very little innovation. So you need competition, innovation, but you do need some safety. As you think about those 3, I think open source is a great way to achieve a balance on all 3 points. So open source is visible, everybody can look at it, you can red team it if you want to by yourself, you don't have to trust the vendor to do all of the red teaming. By the way, as we all know, AI is built on data. So in effect, the IP you're capturing is the data you're bringing. Open source means that somebody can take a model that we might provide, if they add their own data to it, they can keep it, we don't ask for it back. If it's proprietary, in effect, you get it back. So I think it allows for a much faster proliferation, while giving transparency back to those who want to get scrutiny.
On that issue of transparency, there is a conversation about AI regulation. The US has executive orders in place, but not necessarily a framework for a federal regulation. You've got Europe leading the way. You just had Japan's leader coming in, set up their own framework. Are you concerned about the US falling behind in that conversation?
I'm not concerned about the US falling behind. What I'm concerned about is that regulators should not regulate the technology. What regulators should regulate is the risk or the use cases. Can you imagine sitting back in 1995, let's regulate the internet. So let's regulate dial-up modems. How useful would that have been till today?
I may not have learned how to use the computer.
So I think that it's really to the point of Warren Buffett saying the genie's out of the bottle. Don't regulate the technology, because all you'll do is it'll go offshore. These are digital technologies. But regulate the use case so we are sure it's being used responsibly. One that I also talk about is make people who develop models accountable for what those models can do. I think those are tools that are classic policy tools and that can be wonderfully applied.
Opening up the black box, if you will.
Right, open up the box, let people innovate as fast as they can. Look at the last 18 months, how much innovation has come. There was OpenAI, then there was Mistral, now there's IBM. An 8 billion parameter model can do what our 200 billion parameter model can do. Let the innovation go. It'll make the technology cheaper and ubiquitous.
Arvind, it sounds like, just listening to you here, IBM is working on some really cool, impactful stuff on AI. Why do you think the valuation on IBM may not reflect or be on par with some other AI plays?
So I'm going to go cup half full and then address your question directly. First, I think we've had a pretty good run over the last 4 years. If I look at the last 4 years, I think we might have added 60 to 80 billion worth of total enterprise value. So I'd say that's good. Now, that does not meet our own aspirations, so let me acknowledge that point. But I think that as we begin to make progress, we've got to be more consistent in our overall revenue and cash flow performance. I think our cash flow performance has been pretty consistent, but we've probably got to be a bit more consistent on revenue performance. And as that happens, I think we'll get both the multiple re-rating, but also the growth that comes with underlying cash flow and earnings growth. So I think those are the two pieces. I'm very confident our strategy is in the right place. We're building, we're staying in the places that we have credibility, we work with the enterprise, hybrid cloud, AI, and quantum down the road. And by the way, I don't think quantum or AI is really fully priced into where we are, but I'll acknowledge, quantum is still 3 to 5 years out, and AI is kind of in the early innings. I use a baseball analogy, AI is kind of in the first innings of a game, don't quite know how it'll go. Cloud is more like the 5th or 6th inning, so you have a pretty good idea. Not over yet, but a pretty good idea.
Yeah, we like sports analogies here, right? Let's finally talk about sort of bigger picture. You've got a good pulse on where the economy is given just the scale of your client base. On your recent earnings call, you talked about sort of a pullback in discretionary spending. How, is that a pause? Is that a dry up? How would you characterize where that is? What does that tell you about the investments companies are willing to make, particularly in technology right now?
So I'm not an economist, I'm a businessman and an engineer, let me acknowledge that. But I see where my clients are spending and not spending. So I think that what is happening is really down to one reason. And I'm actually quite optimistic about both the US and the global economy, and I'll come back to that. However, interest rates are higher for longer than most people supposed in the middle of last year. So as you take that into account, if interest rates are 2-3% higher for the 5 and 10 year, then people have thought, that means that all of the debt is going to carry an extra price. So I think CFOs are belt tightening against that. Now, that's not systemic, that's not really secular, but it is a trend that's going to be there for a year or two, if that makes any sense. I think that's the belt tightening. If I look at anybody who carries tens of billions of debt, an extra 2 to 3 points is going to cost you an extra few $100 million per year. Okay, let's look after what discretionary spend. Let's not do anything catastrophic, let's not make long-term decisions, but you go belt tighten against discretionary projects. That's going on. Now, if I then look at demographic trends, I look at inflation trends, supply chain, cyber, all of that leads to, well, let's spend more on technology. So that's where you kind of see, I want more software, I want more infrastructure, I want more AI, I want more cloud, but if I can, I'll kind of tighten on labor-based services. I think that's the two speeds we are seeing, and we see that in the chart ourselves. Software grew well over 6% in the first quarter, and consulting was down 2 at constant currency, flat at actuals. So we see that in our own business, and I think it's a reflection of this macroeconomic trend.
Well, I wish we had some more time with you, but we don't. You're a busy guy. Like you're very in demand at this conference. IBM CEO Arvind, Krishna, thank you for making time for Yahoo Finance. We really appreciate it.
Pleasure to be here with you guys.